Welcome, welcome. Good afternoon, everyone. Before we start, if you can all just put a 1 into the chat. Let me know that you can hear me, see the screen, and then we'll go ahead and get started. Perfect. Thank you. Thank you. Cool. So there's more people coming in, but I think we're all set to go. So welcome to another NJThrives small business webinar. If you haven't been here before, these are regular webinars that we hold here at the NJSBDC. And basically it's to help New Jersey small businesses start, grow, and thrive. Now, I'm going to be your host, Christian Pichardo, NJSBDC Program Coordinator, Specialty Consultant, and CEO at nilimamedia.com. Now, for those of you who are new here, the America's New Jersey Small Business Development Centers Network, it's a mouthful, but the acronym is NJSBDC. We're a statewide program. We're powered by the SBA and certain state partners, and we help small businesses in New Jersey with 3 things. So we give them no-cost small business consulting, training and events starting at $0, just like this one, and exclusive small business resources. So for today's agenda, same as always, we go through a couple of small business headlines, get into the webinar after that, and towards the end of the webinar, we hold a short Q&A session. So to jump into the 2 news items that I have here, this first one is what is interesting as a consultant, because usually only particular people with access to university databases were able to find research. So it seems that they are opening it up, the CSIT, announcing the expansion of research with NJ.com is now providing free research online portals. And this research is from our wonderful universities of New Jersey, like Montclair State University, NJIT, Princeton, Rowan, Rutgers, of course. And so this is great, right, for small business owners, because you don't have to, say, pay for a particular portal or have to be part of a university or things like that. So being able to access quality research for your business is crucial. So that this is great. Now, the next part here, this is exciting for any companies that are in the clean energy space. So the state of New Jersey, together with the NJEDA and part of their NJ Accelerate program, they are supporting clean energy businesses. We'll drop the links of the articles into the chat so you can read a little bit more, but all you really need to know right here is if you're in the clean energy space, there's some money awaiting you. Now, before we start with the webinar, 2 things to keep in mind. Please type your questions into the Q&A box. So below, if you're on mobile, I believe whether you're on desktop or mobile, you should have a little toolbar across the bottom, and it should say Q&A. You click there, submit questions. You could do it as yourself or anonymously as well. And that way, once we get to the Q&A session, we can go through all your questions. And please complete the 3-minute survey. So once this webinar closes out, it needs to reach the end, and I need to click end webinar for it to redirect you. But once you fill that survey out, you'll get access to the webinar resources, such as the presentation, the slides, of our speaker and also a link to the on-demand webinar, so the recording of this webinar. So those are the only two things to keep in mind. And now, without further ado, I'd like to welcome Jonathan Donenfeld. He's the owner of GLD Tax Resolution Group. He's going to show us today what are some tax season tips for businesses. Jonathan, are you there?
Thank you, Christian. And
there we go.
Here we are. So thank you, Christian, and thank you everyone for coming. I'm excited to be here. So today we're going to go over some year-end tips, things that you may be able to do before the end of 2022 to help with tax savings. So I'm just pulling up my presentation. Give me 1 minute. Okay, you're able to see my screen okay?
Yep, you're all good to go.
Great. Okay, so so just a little bit about me. I'm a CPA and certified tax resolution specialist. So I founded my own company in 2015 and have been, focused on helping small business owners and individuals resolve tax issues. If you're getting those not nice letters from the IRS or the state, or you're being audited, or you have a liability, a significant liability. And we also do tax planning and tax returns for selected clients. Before that, I worked at a couple of the big accounting and consulting firms in New York and New Jersey. I live in Jersey City as well with my wife and 2 daughters. And when I'm not, having fun talking to the IRS, I'm spending time with my family. Okay. So the first thing I want to tell everyone is, remember, the most important thing is you need to make sure you're staying in compliance. When you're a small business owner, there's a lot of compliance from a tax and accounting standpoint. So, you have to look at what returns you're going to need to file. If you are a partnership or an S-Corp or a C-Corp, you need to file your business return and then your personal return. If you have payroll, you're filing quarterly payroll tax returns. At the end of the year, you need to issue W-2s and 1099s to your employers and contractors. If you collect sales tax, you need to be paying quarterly or monthly, depending on your business and the type of volume you're doing. New Jersey also has what's called an annual report you need to file. You go online and you fill out some basic information and you pay a $75 fee. That's for all LLCs, corporations. If you're self-employed, you need to remember to stay on top of making estimated payments. Remember, if you don't stay in compliance, if you miss the filing deadlines, there can be significant penalties and interest from the IRS and the state. Okay, so as a business owner, make sure you look and you know what your requirements are and are working to meet them. So, we're before the end of the year. Now is the time where you really need to do tax planning, because a lot of the opportunities are gone once it becomes next year. Okay, so the first thing I always tell people, to see what type of tax planning to do, you need to know your numbers. Okay, you need to have like an estimate of the income you made. So not just the gross revenue, the actual income, your take home, how much you're making as the business owner, or how much your partners are making. Okay, so some people do it themselves. I always recommend getting a bookkeeper. There's a lot of bookkeeping software you can use, but make sure you have your profit loss available. So once you see that, you can then say, all right, right now I'm projected to make, let's say it's $100,000. Okay, So the list of deductions I have here are ones that are, I would say, commonly missed or commonly still available. So you still have opportunity to contribute to retirement accounts, depending on what type of business you have. It can be a solo 401k, a SEP IRA, depending on the number of employees you have. You may have to take into account if you have to contribute for employees as well, but most small businesses, or especially if you're like a solo entrepreneur, then you don't have to worry about that. And you should look at, solo 401k or SEP IRA. If you have any equipment that you need to buy, it's a great time to buy it before year end, because if you buy it in January or February, it's getting deducted in 2023. Now, because of depreciation rules, and we'll talk a little bit about that, you can buy equipment before the end of 2022 and get a full deduction for it. And an example is if you need to buy a truck, you're in the trucking business. Let's say the truck costs $50,000, okay? And you put down 10, because of the depreciation rules, you can get a deduction for the full $50,000. So by spending $10,000, you can get a $50,000 deduction. So this is a popular one for small businesses. It's, the auto truck vehicle. The vehicle needs to be greater than 6,000 pounds. It needs to have a gross vehicle weight rating of greater than 6,000 pounds, and it needs to be used, full, at least 50% for business to get the maximum depreciation. Okay. The next, QBI deduction and PTE election, we're going to be talking about a little later. One thing I wanted to mention is we get this question a lot of times about inventory from small businesses. So inventory is, let's say you sell goods, either you sell them online or in store, and you buy things to sell. That's called your cost of goods sold. When you buy inventory, you can't deduct all of your inventory. So you basically only deduct the things you sell or things that are part of costing of goods sold. So buying extra inventory at the end of the year just to buy it is not going to help you get a bigger deduction. Okay. Okay. Deferring income. So one thing that's important. Oh, also I want to mention, if anyone has questions, enter them in the Q&A and we'll answer them at the end of the presentation. Okay. Cash versus accrual. So when you start your business, you have to decide if you are what's called a cash basis business or accrual basis business. I would say 98% of small business are cash-based business. And the reason this is because that means you deduct expenses as you take them, as you pay for them. So it's based on when you spend the money. Okay. Accrual is a more complicated accounting system. It's based on when the expense takes place. So you could buy something, but you may not use it until the next month or afterwards, and that you deduct it later on. Same thing as a cash basis taxpayer, you accrue income when you receive the money. When you're accrual, you can get income even if you haven't received the cash. Okay. So you want to look at your 2022 numbers versus your 2023. So what that means is your income going to be more in 2022 or greater in 2023? So if you just started out and you think your income's very low or it's already a loss, there's no need to accelerate deductions or defer income, because the next year you're going to have greater income. So you may want to, recognize that income now. So like if you're going to take on a project, should you wait till next year or start it now? Whether you get the check in December versus January determines the year that you're paying taxes on it. Okay. So that's an important thing to start looking at. So again, know your numbers, you need to know how much your business is making, not just the top line. You need to know your expenses. Okay. Entity status. So the type of business you are, the type of entity you create also has an effect on your taxes, and it can have a significant effect. Okay. Most small businesses start out as a sole proprietorship or a single member LLC. So when you are, both of those have the same tax status, meaning you both file what's called Schedule C with your individual return. Okay. The difference is the LLC provides more liability protection. I always recommend, if you're creating a business, create an LLC to at least give you some liability protection. When you later on, if there's certain taxes that are like payroll, if the business ever doesn't work out and goes under, there are certain taxes that a sole proprietor would be liable that someone that was the owner of an LLC would not. So, it's not much of a difference now, but it's a difference later on when if things go bad. And look, most small businesses have a bad period or some issues at some point. So you want to, take that into consideration. S-Corp. So that is probably, the most popular type of small business that I recommend. If your net income is greater than $100,000 and the business is based in New Jersey, I usually recommend being an S-Corp. The advantage of the S-Corp is let's say the business makes $100,000, you have to pay the owner a reasonable salary. And depending on the business, let's say that reasonable salary is $50,000, that other $50,000 of income saves on self-employment tax. Okay. So, what I would call the disadvantage of the S-Corp is you have to file a second tax return. You have to run payroll. So there's a cost to that, and, some more administrative costs and more time. But, as you make more money, the savings can be significant compared to, just a regular LLC. The LLC usually has more flexibility if you have multiple partners. When you're an LLC, you can make a tax election to be an S-Corp. You can make a late S-Corp election. So a lot of clients, a lot of people we work with, if we see their business is doing well, we'll make what's called a late S-Corp election at the end of the year. So that's something you can still do now. So if your income has increased significantly and you're an LLC, you can become an S-Corp. You just need to run some payroll before the end of the year, do the S-Corp election with the IRS and the state, and that there can be significant savings. So we're not going to talk too much about C-Corps. C-Corps, some small businesses are them, but basically they're a separate tax-paying entity. So there's a potential for double tax, if that makes sense. Meaning, like, if the business makes $100,000 and you pay the owner a salary of $50,000, the business pays tax on that $50,000, and then if the owner wants to take that out as a dividend, then they pay tax again. So there's potential for double tax. There are some advantages. There's some liability advantages. There's also, if you're trying to raise money and have shareholders and issue stocks, sometimes a C-Corp can be more beneficial. Also, what's really important, you need to know your industry, where your business is located, and your breakdown of ownership when determining the election status. As you have more owners and different shareholders, it becomes more complicated, and it's not as straightforward whether it makes more sense to be an S-Corp, LLC. You have to really look. And also, certain industries require to be an LLC, or they may have issues with being an S-Corp, so you have to look at that. Also, certain states and certain cities have corporate taxes, like New York City. New York City is not a good place to be an S-Corp because of their corporate tax. But we're going to focus on New Jersey. Okay. So the S-Corp election, so when you're an LLC or a corporation, you can make a tax election to be taxed as an S-Corp. So you're going from being an LLC to now being taxed as an S-Corp. So a lot of S-Corps start out as LLCs and then get, changed. You now file a separate business tax return, pay the owner a reasonable salary. As I stated before, the potential to save on self-employment tax. So you can make a late election. So you still have, you can still do one for 2022, even though it's past the deadline. New Jersey is pretty liberal in accepting the elections as long as you file the tax returns timely. Okay. Once you're an S-Corp, you also have the ability to make what's called a PTE election to deduct your state taxes. We're going to talk about that a little further along, but that's another reason to look to be an S-Corp. Okay, so QBI deduction. So a couple years ago, the government introduced what's called the QBI deduction. So this is a really big advantage for people that are self-employed, and you really want to try to maximize it. So basically, you can potentially get a deduction of 20% of your business income. Okay, so business income, that's your ownership in a business, that's QBI. So there are limitations to it. There are limitations based on income, and there's limitations based on the type of business. For whatever reason, they put a big limitation on doctors, lawyers, accountants, and other certain professionals. I don't know what they have against us. I don't know what we ever did to them, but this really has lowered the bar. It really, when people come to me and they say have a situation where I can be a contractor or W-2 employee, you have to take a look at the QBI deduction, because this is a big savings on tax. Okay. Now, the thing to remember, you may not, so the QBI deduction doesn't apply to tax when you put money into retirement plans. So it limits some of the benefits of putting money into retirement accounts. Also, there are limits based on payroll and the gross assets of a business. So if you're an S-Corp owner, you need to now look at how much your salary is and how that affects your QBI election. Or if you're like a partner and you get a guaranteed payment, you need to look at how that affects your QBI election. So, we do a lot of planning at the year end with this, adjusting people's salary, to maximize the QBI deduction. Okay. NJPTE election. Okay, so this is something that New Jersey did and a lot of other states are doing now. So a couple of years ago, the government limited what was called the SALT deduction. So previously, you could have deducted you're able to deduct a portion of your state tax returns and your state real estate taxes on your individual return. The government put a limit on that. What they've done, and this is only available for business owners, again, a positive for business owners, you make this election with the state, okay? And what happens is you pay your state taxes through the business and you can deduct them on your federal return. So what does that mean? So let's say you're gonna owe $10,000, all your income is self-employment income, and you're gonna owe $10,000 to the state of New Jersey, okay? If you make an NJPTE election and pay that $10,000 before the end of this year, okay, then you will deduct that $10,000 on your federal return. And so let's say your federal tax rate is 30%, you'll save $3,000. So just by doing that election, it can be a significant savings. The thing to remember is sole proprietorships and single member LLCs, I don't believe are able to make that election now. You need to be a partnership or an S-Corp. So that's another reason for being an S-Corp. But you can change this election over the years, but it's you need to make the election, and then you need to make the estimated tax payment before year end. Okay, and again, you have to make it correctly. It has to be through the business, through the New York State, to the New Jersey PTE election to get the deduction. I believe New York has a similar rule, and a lot of other states are allowing this creating similar rules as well. Okay. So we kind of went through fast. What I'd like to do is now open up to questions, okay? And then kind of, we can work backwards a little bit, okay?
Awesome. So go ahead, everyone, and submit your questions into the Q&A box. Remember, you can ask anonymously if you have something more personal to ask, but let's go ahead and get started.
Okay.
Go ahead.
Oh, I was saying I see some questions. Do you want to read them out, or?
Yep.
Great.
All right. So Anonymous asks, could you please explain the auto/vehicle depreciation again?
Okay, it's a good question. So this is something that, I think I see most on social media, people getting this wrong. So people are like, you can buy a car and deduct it. So you need to have a legitimate business purpose for your vehicle. Okay, that's the first thing. Okay, so let's say and what is a legitimate business purpose? So one thing, commuting to and from work is not a legitimate, purpose for the business. You need to have to go to clients, have to buy supplies, go to jobs, use your car to take you to and from different places for business. Okay, but then, so let's say this is a vehicle that you use personally. Okay, you have to keep track of the miles. Okay, and then based on the miles, what is the business percentage? So let's say you use it 60% for business and 40% for personal. Well, now you can get depreciation. So you look at what did you pay? How much did you pay for what was the sticker price of the car? Okay. And then depending on the weight of the vehicle, that determines how much depreciation you can get in the first year. Okay. So if it's a greater than 6,000 pounds, you may get 100. Well, if it's, let's say you only used it for 60% for business, okay, and the car cost $100,000, the vehicle costs $100,000. I'm just using that for easy math purpose, okay. You could get like a $60,000 deduction, okay. So that's how that works. But again, it's complicated. So I'd suggest you talk to a professional and go through your situation with them, because it depends on the type of business, your mileage, and type of vehicle.
I have a question that I want to add to that, and I'm sure that there's a ton of sort of gray area on a lot of this stuff. So the question is, you mentioned that traveling, so commuting to work, you can't write off, but going to a meeting you can. But what if you have to commute to your place of work to have a meeting?
So let's say you commute to your place of work and then you have to drive in the middle of the day to see a client. You get the full, okay. That's how you get the deduction. Okay, so that qualifies. But the commuting portion isn't deductible.
Got it. So from home to office or office to home is not.
Right.
Okay. Great. Next question from Gail asks, if the business did poorly during 2022, would it make sense to make purchases in 2023 instead?
Yeah, that does, because if you think that 2023 is going to be higher, then it makes sense to try to, use your deductions in that year.
All right. Anonymous asks, what if inventory value slash price drops? Can we write it off? Our inventory is not currently recorded at net realizable value. So do we have to change accounting method if we want to write it off? What are the pros and cons for changing inventory accounting methods?
So what happens is this. So this is a complicated question, and I'll try to answer it my best. Okay. So when you buy inventory, okay, it's it gets deducted as cost of goods sold. If you are saying so, depending on your accounting method, okay, whether it's cash or accrual. So basically, if you have inventory sitting there, okay, that you guys are saying we're not going to sell, okay, and you're giving up on it, then it can be written off at the cost of the inventory. The pros and cons for changing inventory accounting method, I would say that's a business by business decision, and it would be tough to answering without knowing more.
Awesome. All right, next question here is from Gail. If starting a new micro business or nonprofit, is there any benefit or drawback to creating / registering purchasing product now in December versus waiting until January?
Okay, so a business and nonprofit are two very different things. Okay, so this is very important for everyone to know, is that nonprofit is not a business. It has completely different rules than a business. So, and we're not going to talk about nonprofits here because it's just, I don't want to confuse people, and we could have a whole nother webinar about rules for nonprofits. So I'm not going to mention anything on nonprofits. So a business, well, sometimes it may be easier to start in the new year in the sense that once you register, you could have certain filings with the state. So if there's no rush and I would wait till January to start because you're the new quarter, new year, if there's no rush. But that's just, but businesses run when they run. So, but if you're able to hold off to the new year, that just makes it easier in my opinion, but to each his own.
For sure. Or if it makes sense, get some, open up some new credit cards, get your points in, get some of the cool benefits of that, right?
I'm not a credit card expert, so I'm not gonna go there. I hear that those are things that you can do as well. I mean, I would just say from a perspective of compliance, it's easier if you're like starting something January 1st versus December 28th.
All right, next question is from Barbara. She asks, so what is better for a owner operator trucking LLC, or well, she's in trucking, but the question is LLC or S-Corp?
Yeah, so it depends. It depends on the income of the business, how many owners, and I always say if you're and where you're based. My general rule, and this is every business is different, if the net income is over $100,000, I would definitely look at becoming an S-Corp.
All right, Mary asks, can PTE be used for an LLC with 2 members?
Yes, it can.
Awesome. John Berg asks, can you repeat the benefits / process of an LLC making the late election to be taxed as an S-Corp? And is being taxed as an S-Corp the only way to use the PTE election?
So the LLC needs to make an election with the IRS and the state. It's called, there's an S-Corp election, and then you need to do a late S-Corp election. And then same thing with New Jersey. You need to do an S-Corp election and a late S-Corp election. And if you're a partnership, if you like a multi-member LLC, you can use the PTE election. You don't need to be an S-Corp.
Barbara asks, how does the auto deduction work for an S-Corp?
It's similar to what we've discussed. You have to make sure you keep, track of your mileage of the business and make sure it has business purpose expenses, but it can work the same way.
Awesome. And I believe
How it
there's
gets reported. So one thing I just add, so it's how things get reported are different as a single member LLC versus an S Corp, et cetera. But for this purpose, you need to keep track of mileage, and both S Corp and LLC are available, for the to get the accelerated depreciation.
Perfect. I know that there's certain accounting softwares that now have apps that track or can track mileage. I believe
Yes.
location based,
I think Mileage IQ is one that some of our clients use.
Right. Yeah, so that can make it easier for you guys to track your mileage. All right, next question we have is Nina. She asks about vehicle deductions. Can I buy this month and deduct for 2022 if I did not use it yet for the whole year, or should I buy it in 2023?
You can buy it December 28th and get the full deduction. So that's why it's a great, opportunity. So you don't need to use it for the full year. It's based on as long as you bought it and have some business use, you can potentially get the deduction.
And my own question to that is, I've read in so many different articles that that has to be a certain weight. And I know you mentioned something about weight, but the weight only pertains to how much the deduction is.
No. That's a good question. So basically, the vehicle has to have what's called a GVWR, gross vehicle weight rating, of 6,000 pounds or more to be allowed the 100% depreciation. Okay, so it doesn't matter the weight of the vehicle. You can still get some benefit, but to get the full benefit, to be able to use all the bonus depreciation, the vehicle has to be 6,000, has to have a gross vehicle weight rating of 6,000 or more. So what I learned is that some cars don't weigh 6,000, they may weigh 5,000 something, but the GVWR is higher. So don't look at the pounds, look at the GVWR.
Interesting. Cool. All right, next question we have here is from Nancy. She asks, who can we work with directly to take advantage of S-Corp benefits for taxes?
Our firm helps with that. If you want to reach out, I'll put my contact information at the end.
Awesome. John asks, does attending industry-related meetings and symposiums count for mileage deduction as well?
Yeah, if it's business, those are business-related expenses, in my opinion. I don't know your industry, whatever, but if you're an accountant and you go to an accounting conference, yes, or accounting going to a local small business conference, yes.
Perfect. Just checking the time here. I think we're still good. Nina asks, have a partnership LLC and we are buying our inventory by end of year and will not have income till next year. Do we deduct for the year of 2022 or is it moved into 2023?
Yeah, so I mean, this is a specific question for your business, but what I would just say generally, buying inventory is usually deducted when sold. So it seems like what you're saying is 2023, but I'm not giving you a hard answer. I would talk to a professional, but it sounds like that would be 2023 for you.
Mary asks, if there are equal partners in an LLC, do we both have to include the business info on our individual tax filings?
So if you're in a partnership, each partner, you file a partnership tax return, which gives each owner what's called a K1, and they're supposed to put that K1 on their personal return and pay their share of taxes.
Next question is from Jessica. She asks, I'm a financial professional. If I decide to open my own agency, what will be the best type of business while still working with a broker? I'm assuming the word is dealer.
Yes. Yeah, so that's that industry has some specifications. So you'd have to talk to someone, that's specific about being a financial professional, because some of them require you to be a sole proprietorship, and to my understanding, because you're going to get paid commissions based in your individual name. So, you should definitely talk with the broker dealer and people in that industry.
Perfect. Next question is from Darcy. Is the total office rent deductible for a therapist?
Well, if you're a therapist and you're renting an office to use for business, then the answer is yes. But if you're saying total office rent, like are you with other people, or are you, the answer is rent isn't the answer is rent is a deductible expense.
Yeah, it could get complicated if you're maybe renting a whole floor, but then subleasing rooms, right?
Right. That's what I'm saying. So again, everyone's specific. So this is my disclaimer to everyone. You should talk to a professional about your specific situation. Yes.
For sure. All right. Precious asks, a business registered as Inc. is which entity? How would you know the election?
So Inc. means it's a corporation. It could be a C corporation or an S corporation.
Next question is from Mary. Do you have recommendation for user-friendly software for profit loss statements?
QuickBooks, but I always suggest get a bookkeeper. There's definitely some cheap bookkeeping options, but I find most people aren't great at doing this themselves. But QuickBooks is the most common used.
Where would you go about finding a bookkeeper?
There's if you search on Google, I can recommend some people. If anyone's looking for a bookkeeper, I can recommend someone.
Okay, good. I need one. So yeah, for everyone here, usually most of our clients at least use QuickBooks. Personally, I've been using Waves apps, which is fine for simple stuff, and it's great because you can connect all your bank accounts and automatically puts in all the charges and stuff. But yeah, give it a quick Google. What are software is good for me? It all depends on what you like to do on the software and your level of expertise in using online tools. Next question is from Barbara. Can you talk about the new auto energy credits?
So there are some credits for buying electronic vehicles. I don't know them all off the top of my head, but there are credits for buying electronic vehicles. So I'm not the expert at that area. I'm sorry.
Let's see. I believe the last question here from Gail, referring to a question from Nina, which was buying a vehicle for her business now in December to use a deduction this year. Just wants to confirm that it seems to contradict the answer to her question about starting a new business in December versus January. If I start in December, can I take advantage of purchase deductions also?
You can, but it's I'm not sure of the original question, but I think she was basically, if you don't have, like, do you have revenue? What, like, to have a real business, you need to have customers, revenue, so that, matters as well.
Yeah, so the original question from Nina was, um, for the vehicle deduction, can I buy the vehicle this month and deduct it for 2022 if I did not use it yet
Yep.
for the whole
Yeah.
year, or buy it in 2023?
Yeah, so no, the answer I gave would, so yeah, the answer is you can buy it in December and use it. I think this question from Gail, she asked about, is it make sense to start my business in December versus January because she can take care of deductions? The answer is yes, you can, but like you can't just have, when you start a business, you have to have business purpose, and you have to have, usually businesses start when you have things that are available for sale, services, per things. So you wouldn't be able to deduct them until you have those things that are available for sale.
Got it. Perfect. Mary asks, Christian, could you repeat the name of the software? So I don't remember if it's Wave or Waves with an S, Waves apps. So if you could just Google it, it should be the first one that pops up. It's pretty popular. All right. So it seems we have no more questions. Let me see. I have two questions actually in the chat. One of them is new.
Okay.
Question from Roro. If I started a business in New York in 2021 and then moved to New Jersey in 2022 and haven't filed taxes yet, do I have to register my business in NJ and file taxes for both New York and NJ?
So to do business in any state, you have to register there. So you would have to register your business in New Jersey, and you'd have to file in both states.
Perfect. All right. Those were all the questions. It seems we're all
22.
good on our end. Right. All right. So let's see. All right. We have about 10 more minutes. Are you good on your end, Jonathan?
Yeah, sure. So I think we just
Okay.
had one more that just popped up.
Okay. Yeah. Frank asks, I rent my house and also work from home. How much can I claim as business rental?
Okay. So if you work from home, is it self-employment work or W-2 work? So you can't get a home office deduction if you're an employee. So if you have a small business and you work from home, you can deduct the home office. It's the percentage of space that's solely used for your home office. Meaning, like, a simple way is, let's say you have a 3-bedroom apartment and one of the bedrooms is used for your office. That bedroom, let's say that's 15% of the square footage of the apartment, then you can get deduct 15% of your rent or 50% of the mortgage interest and real estate taxes, etc. So you have to calculate the total square footage of your house and the total square footage of the office space. And like, working in the kitchen doesn't mean you can deduct the whole kitchen. So basically, like, it's only the area that's only used for your office. You can't deduct the general space.
It's going to cost you money to make your own bagels, guys.
Yes.
All right. So Frank just wanted to confirm he's self-employed S-Corp.
Okay. Yep. Okay.
Great. I think that should be it. I do have a personal question I want to ask.
Sure.
This one's a little complicated one, and it's just solely based off of some of these, I'm sure you've seen it, these TikTok videos that come up
Sure.
with all these very creative strategies.
Mhm.
So there's a strategy where you can do one of two things. It could be with an office, or I believe a car. So having the business own the car and then lease it out to you.
Yeah, I mean, that doesn't, yeah. So I would tell everyone, please be very careful what you advice you get, I would talk to a professional that's licensed, like a CPA, EA, or attorney, someone that actually, seeing a video on TikTok of someone that does something doesn't mean it's correct. Yeah, so I've seen those, and it just, the answer is no, they don't. That doesn't make sense. And
Got
and
it.
the other
Got
thing
it.
is you can't. And the other thing is, and it doesn't seem like the it seems like people here are real business owners. Like, just because you create an LLC doesn't mean you have a business. You have to have a real business purpose. You have to have, you know, customers, or the
Income, right?
intent to get customers, intent to sell products, etc. You can't just
So,
create an LLC and then start deducting your personal expenses. It doesn't work like that.
so technically, you would need income. Is that sort of
You don't always need income, but you need proof that you've taken steps to try to create a real business,
gotcha? Yeah, yeah.
And
Or
one
else
thing
Uncle
the
Sam is gonna
IRS,
go get you.
yeah, and one thing the IRS does is, if you have like a business loss for multiple years, that's a good red flag to get audited. And it's also, they can say that this is not a real business because you're not trying to make a profit. Well, why would someone have a business that just loses money every year, year after year? So they would classify that as a hobby, not a business, to not allow you to take the losses.
Great. So final thing here, they're asking for your info, your contact
Sure,
info.
yeah, I'm just
So if
gonna
you
add
just put
in
that in there.
here.
All right. I think that is it, everyone. Thank you all for joining. And thank you, of course, Jonathan, for
Thank you.
wonderful
Yeah, this was great.
presentation.
Thank you. And, I really appreciate being here. And, please feel free to reach out if you have additional questions. Okay.
Absolutely. So I'm going to go ahead and close this out for you guys. So next week we don't have a webinar, but you can go to our YouTube channel, youtube.com/NJSBDC-headquarters, and you'll find all our videos. It says we have 54, but by now we probably have a few more in there. So a lot of resources and value to find in those videos. So go ahead and visit that. And in case you're looking for no-cost small business consulting, training and events starting at $0, and exclusive small business resources, go ahead and visit us at njsbdc.com/request-counseling. If you haven't registered with us, again, the only reason this is no cost is because we're supported by the SBA, the Small Business Administration, so AKA the government, and state partners such as Rutgers University, NJBAC, NJEDA, etc. So these are all resources to you that I recommend to take advantage of. So go ahead and scan the QR code here or go to the link on the bottom. But that is it for today. I wish everyone, if I don't see anyone here before the end of the year, then Merry Christmas and a Happy New Year. Thank you, everyone, and hasta la vista.